Yes, my dear. See, as I told you, fixed assets and depreciation related journal entries. Yeah, I took a small break. Okay, then. So, fixed assets and depreciation, as I told you, many students do have some doubts. Okay, like, I mean, they're not very clear whether they're in the right route or not. So, after listening to this, some 15 minutes approximately, I'm very sure you will be very clear and you will be very happy. Like, you know something. Correct. You will not do such a small mistakes when I am discussing the main topics. Done? Chalo. So fixed assets depreciation related. What is that, sir? The first thing when you see the balance sheet. Okay, right. Do you have fixed assets only one account, or is it presented fixed assets minus accumulated depreciation? Okay, yeah. I'll tell you in some of the cases. Okay, in some of the cases. Yeah, what is that? Say in the if you say this is the balance sheet, some balance sheets you will find only fixed assets. Yeah, actually now the word is changed, but anyhow we know it. Fixed asset, what is the latest terminology, my dear? Yes, exactly. Property, plant, and equipment. Okay, this is the new terminology. If you look at any company financial statements latest, you will not see the word fixed assets. Okay, even as per the Companies Act, you will not see the word fixed assets. It is a property, plant, and equipment. In short form, we will call it as PPE. Yeah, but doesn't matter. Fixed asset word also you can use it. Okay, right, not a problem. As far as we understand it, what it is, how does it matter? Nomenclature, correct? Now just name. Then, so in some of fixed assets, if there may be something like 1,000 minus accumulated depreciation. Okay, yeah, accumulated depreciation something. Or say some 200 rupees. Then that deduction, correct? Na? So reduce 800 will be on the outer column of the balance sheet. Agree? Right. So now the question, what is the question here? When you observe the balance sheet, okay, this is type number 1. Okay, right. Type number 2. Type number 2, what will be there in the balance sheet? Simply fixed assets. 800 rupees like this is there. You don't find accumulated depreciation on the face of balance sheet. Got it? Yeah, not in the face, somewhere, nowhere it is there. Right. So now one question should come. Sir, which is correct method? Which is actually followed by the company? Correct. Now, see, I'm a practical guy. In the sense, I deal with the financial statements practically. Not only in the classroom preparation of financial statements. We prepare for thousands of crores of company also. Financial statements, I do prepare. Correct. Na? So, what kind of questions you should try to ask? Whatever question you get that you should ask me. Okay, na? But what kind of question you should try to ask mostly practically how it happens. Correct. Na? Such kind of question if you ask, that is useful for anybody. Right. And again, this is my number, my dear. This is my number 5430. Yeah, personal number. My request is you send me a WhatsApp message. Okay. Whenever I am comfortable, I can call you or I can respond to you somehow. Got my point? Right. Instead of WhatsApp, if you send me on Telegram also, that is very great. If you send me on Telegram, because generally all the students do message me on the Telegram. It is more and more comfortable. I will also know, like suppose today if I forgot to answer your question, tomorrow I will answer. Okay. Correct. And I will have the, what is that? Since Telegram, all the students' information only will be there. So I'll get to know. Okay, this guy answered, this guy not answered. Like that, I'll check. Frequently, I'll check. And you will get the answer for sure. Okay, done. Sir, which method is correct actually? Which is practically followed? This is practical. Okay, first one is the only practical. This is only practical method, my dear. All the companies do follow this method only. What is this, sir? This is bookish. Just to bookish. Only in the classroom, degree, somewhere people will follow. This is useless, but still you have to learn. Why you need to learn? Because some of the questions in ICA also still they are giving like this. That's why you need to have understanding of method 2, method 1 presentation, method 2 presentation, both you need to learn. So whenever you see a financial statements, balance sheet with respect to fixed asset, first thing you should observe whether there are two accounts. or is it one account? Correct. Na? Whether correct. Na? When only one account exists in the balance sheet, that is fixed assets account. And second one is what? If you have two accounts in the balance sheet, that also I'll deal. Okay, that is fixed assets account and accumulated depreciation account. Okay, right. Hope you copy it. Yeah, copy it. Then I'll take you. This is method 1, I can say. This is method 2, I can say, whatever it is. Right. How the journal entries will be passed. What is the impact? It is only presentation impact. But this is the only practical method what I was talking. This is the practical method. Clear? Done, my dear. So, next. So, this is method number 1. Method number 1. When one account, that is fixed assets account, only fixed asset account is there in the balance sheet. How do you record journal entries? Look at this. Suppose now fixed assets you bought it. Correct. Na? Fixed asset you purchased. Excellent. What is the journal entry? Yeah, if I purchase a fixed asset account debit to cash or bank. Correct. Na? Basically paid, payable, whatever it is. Cash or bank 100 rupees I'll record, sir. Super. Okay. At the end of the first year, are you supposed to depreciate it or not? Yeah, depreciation, so obviously you have learnt in big degree, foundation, everywhere you learnt. 10 plus 2, correct? Na? Depreciation. What is the journal entry for depreciation? Superb. Depreciation expense account debit. Okay, depreciation expense account debit to what? To fixed asset. Directly will cut it. Why, sir, directly cut it? Because I have only one ledger account, man. I have one account, fixed asset. So where can I cut it? I will cut it from the respective asset. Yeah, you write it along with me. And next what, when I give the second method, how will it happen? Correct. Now, which method I should follow? That depends upon the balance sheet. What is given? Balance sheet, if it is one ledger is one asset is given, then this is the method. If they have given 2, then my journal entries will change. Okay, right. Yes, sir. Right. So now, how does it appear in the balance sheet, my dear? If I prepare a correct. Now, what is the book value? What is book value of the fixed asset? Book value you debited earlier 100 rupees. Now you credited 10 rupees. So 100 minus 10, that is equal to 90 rupees. Agree? Perfect. So if the fixed asset is sold, before selling fixed asset, how is there in the balance sheet? Only one line item, fixed asset account 90 rupees. That's all will appear. Now question is, fixed asset is sold for profit, loss, no profit, no loss. All the circumstances I will give you. Okay, right. 3 situations. What is the book value of fixed asset? 90. Correct, na? Yeah, that is there in the books. Book value means what is there in the books. Yeah, remember, my dear, this is called book value. Okay, this is called book value. People will call it as a carrying amount. That is also same thing. Both are one and the same. What is carrying amount? What is carrying amount? That is the amount carried in the books. That's all. That is the amount carried in the books of account. Okay. Carrying amount means what is the amount carried in the books of account? Nothing else. That is nothing but book value. Got it? Okay. 90. Now you are selling it for 80 rupees. Situation number 1. Okay. Now what is the journal entry record? Book value is 90, sold for 80. Have you got profit or loss? First basic question. Have you got a profit or loss? Loss. Correct. Now 90 rupees ko sold for 80 rupees. Loss should be, loss, what should I do? Shall I debit or credit? Loss and expenses. Correct. A few minutes before I spoke. Should be debited. Agree? Exactly. So what is the entry? Have you got 80 rupees? Yes. So cash account debit 80. Loss also is there, na? Correct. Loss account 10 rupees. And since asset is sold, na? Asset is sold. Asset is sold means asset is not physically with you, not physically with me. Then it should not be there in the books of account also. Correct, sir. Agree or not? So that means fixed asset, correct na? So now example, I'll take it here. So I'll say fixed asset account, I will say ledger account, I'll prepare. Correct na? When you have bought, you said 2 cash. How much number? 100. Correct na? Yes. How much number you got it, my dear? 100 rupees you got it. Excellent, sir. Now, depreciation, what did you do? By depreciation. Depreciation. How much is the depreciation? 10. So, 100 minus 10 is equal to 90. Now, when you sell the fixed asset physically gone. Super. At the same time, fixed asset should not be there in the books of account or not? Exactly. So, what should I write? So, if I write here 90, correct na? Whatever you say, whatever thing you want to write, you write it. 2 lines, 1 line, you write. Correct. If you write now is that fixed asset account? What is the balance of fixed asset? No, sir, nothing. Zero ho gaya. Right. So when you sell the fixed asset number should not be there in the books of account. So got my point? So that is a basic common sense concept. Done. Let's come to the right here. So fixed asset book value how much? 90. 90 fixed asset shows a debit balance or credit balance? Debit balance. You sold means it is reduced or not? Reduced. So since it is reduced, are you supposed to credit or not? Yes. So that's why you will say fixed asset account debit 90. Hope you are clear. Perfect. Chalo. Let's go to the next one. Suppose you sold it for 90 rupees. What is the book value? 90. Sold for 90. Have you got any profit? No. Any loss? No. So simple journal entry. Why can't you record? I hope you recorded. Yeah. So what is the entry, my dear? Cash account debit. Exactly. To fixed asset. How much? 90, 90. Any P&L? No P, no profit and loss. No profit, no loss, nothing. Done. Next, sir. Sir, I sold it for 120 rupees. How much is the book value? 90. Sold for 120. Correct, na? So that means have you got a profit of 30? Profit should go to P&L. Profit will be debited or credited? Credited. Yes. So first, have you received cash? Yes. How much is the cash? 120, sir. Correct, na? Fixed asset gone? Gone. Fixed asset gone means fixed asset balance should become 0? 0. So right now fixed asset is showing a debit balance of 90? Yes. So what should I do? Credit it. So that's all. So to fixed asset 90. Correct, na? Next to profit and loss. This is a gain. Correct, now what isn't it a gain? Yes, it is a gain. Gain on sale of P&L. Gain on sale of fixed asset, we'll write it. That ultimately transferred to profit and loss statement. Clear? Right. What have you learned so far? This is a situation of when you have only one ledger in the balance sheet. Correct. Now there is only one ledger, that is fixed asset ledger. Now let's see the situation where you will get two ledgers. One is fixed assets account, next is accumulated depreciation account. Shall we go with? Done. Now, so when two accounts are there, correct? Yes. What are the two accounts? Fixed assets account and accumulated depreciation account. Two accounts are there. Listen, my dear. Fixed asset account, correct na? FA account. FA account is an asset account, correct na? It shows which balance. You write it. It shows debit balance. It shows debit balance. You make a note of it. Okay. Sir, what about accumulated depreciation account? Accumulation depreciation shows credit balance. Credit balance. Sir, credit balance means liability, na? No, it is not liability. Okay. Fixed asset value comes down means you will go and pay fixed asset, please take. Is it? No, we are not liable to anybody. Our asset value has come down. Correct, na? So how do you present it in the balance sheet? How do you present it? You write it. How do you present it? We'll write fixed asset less accumulated depreciation, ACC DEP, accumulated depreciation, E number minus E number. Like this presentation will happen. But remember, this is a debit balance, this is a credit balance. That's why you are reducing it. Correct, na? If both are debit balances, we'll add it. If both are credit balances, we'll add it. One is debit, one is credit. Then automatically you are supposed to reduce it. Correct, na? That's very simple. Chalo. Let's go to our correct, na? I hope you noted first. Done. Chalo. Let's go here. So when two accounts, that is fixed asset account, accumulated depreciation account exist in the balance sheet. Done. So what will happen when you purchase the fixed assets? Correct, sir. I bought it. When you buy the fixed asset, what will be there? Fixed asset account debit. Yeah, that is gone somewhere. Okay, right. We'll write it here. Yeah, then it is a fixed asset account debit, 100 rupees cash account. Done. Now, sir, current year depreciation, 10 rupees depreciation is there. Na? How do you record it? Remember now, very, very, very carefully. Earlier, there was no accumulated depreciation account. Correct, na? Right. If you tell once again, na, sir, depreciation expense account debit to fixed asset account, then why you opened accumulated depreciation account? Correct. Na? Why did you open accumulated depreciation account? Yeah. That's why don't credit the fixed asset directly. Route it through accumulated depreciation. Okay. Means what will happen? Observe this carefully. Whenever there is accumulated depreciation account in the balance sheet, your depreciation journal entry will change. What does it be? It will be fixed as, I mean, depreciation expenditure account debit. Yes, it is a depreciation expenditure account debit. Two, correct na? Two accumulated depreciation. As I told you, this is a profit and loss item. It is written already. Correct na? What about this, sir? This is a balance sheet item. This is a balance sheet item which will be reduced from the fixed asset. Agree? Now, question, basic question. When you are doing this entry, have you touched the fixed asset? Have you created fixed asset account? No. So, what is the fixed asset balance? 100 because I have not created the fixed asset. Instead of creating fixed asset, I have created accumulated depreciation account. Correct na? So, there are two ledger accounts. Fixed asset has a 100 rupees of debit balance, 10 rupees of accumulated depreciation, which is a credit balance. Correct na? So, how are you supposed to present it now? Yeah, as I told you, asset minus accumulated depreciation, that number comes in the outer column. Agreed? Right. Excellent. So, now, sir, how do you present it? Rest. What is the book value? Yes, listen. Book value means not just the fixed asset, because we are maintaining two ledger accounts. Whenever there are two ledger accounts, you have to tell fixed asset minus accumulated depreciation. That is the book value. Even though there are two ledger accounts, you are supposed to mention, you are supposed to say there are two ledger accounts. Club it. Cost minus accumulated depreciation. That number 70. 70 only supposed to be given. Hope you got it. Exactly. Perfect. So now if fixed asset sold, that we'll see it. Okay na? Now I'm trying to give one more thing. One second. Na? Where is it? Yeah. One second. I'll redo it. So year 1, 10 rupees. Year 2 also 10 rupees of depreciation. Year 3 also 10 rupees. Every year you will pass same journal entry. Depreciation expense account debit to accumulated depreciation. Something like that. Okay. So year 1. So totally now, how much is the accumulated depreciation? First year created with 10, next year also 10, next year also 10. Totally 30 rupees is created. So that is what 30 rupees. Have you ever touched the fixed asset, my dear? No, sir, I never touched fixed asset. So 100 rupees is my cost minus 30 rupees of so far depreciation first year, second year, third year. Correct na? Exactly. So 70 rupees is my book value. Correct. Now let me open the balance sheet. Yes, if I create a balance sheet like this, we'll present like this. Two accounts are there. Correct na? Fixed asset account shows debit balance, accumulated depreciation shows credit balance. That's why we are reducing. 100 minus 30, that is how 70 will come. Remember once again, you have got two ledger accounts. One with fixed asset debit balance, one accumulated depreciation with credit balance. Why do you do like this, sir? Can't we directly do it simple method? No, directly fixed assets को credit करेंगे. अरे credit fixed assets को you can reduce it. But anytime, how much you invested in the fixed assets? If I ask you today, if I ask you how much you invested in the fixed assets initially, do you know? No, sir. No. If you show only 70 number, people will understand only 70 is there. No, man. I invested 100 rupees on the fixed assets. All these years, depreciation I have charged 30 rupees. That's why the value has become 70. It is easy to understand. Okay, if you directly cut it from the fixed asset, this you cannot read the financial statements in the right manner. Got it? That is the reason we do in this manner. I hope you understood the logic. Done. Now, you sold it fixed asset as usual, like three things. Done. Now, first one, you sold it for 60. Yes. Now, you try to pass the journal entry. I'll give you a few seconds. You pause yourself and you can try the journal entry. That is where you do mistakes. Never ever hesitate to do mistakes. Where you should not do mistakes? In the examination you should not do mistakes. In the classroom, sir, in the classroom you should do mistakes. Then only you will learn it. Actually, you will learn from the mistakes. Everybody today, if I say I am good at it, I have learned from my mistakes. Okay, yeah, nothing wrong in doing mistakes, and end of the day correct yourself. That's all. Then automatically, since you have done the mistake now, you will never repeat the same mistake. Obviously that nobody will repeat. Even by mistake one time I repeated, okay, next time you will not repeat it. Got it? That's all. So never ever hesitate to do mistake in the classroom. By doing mistake, the perfectness will come, so that you will be writing exam perfectly and you will be clearing in the first attempt. That's all. Okay, first attempt, the second attempt does not matter. Just don't care. The next what you are writing, that attempt you are going to clear. That's it. Okay. So, sir, if the fixed assets are sold for 60 rupees, what did I say? Fixed assets are sold for how much? 60 rupees को sell किया, sir. Excellent. So now tell me, 60 rupees को sell किया. First thing you should remember. What you need to remember? Yes, I'll tell you. See, in the balance sheet, you have two accounts. One is fixed asset account, debit balance of 100 rupees minus accumulated depreciation of 30 rupees. That is correct. Now, that is how 70 rupees is there. Two ledger accounts are there. When I say I sold the fixed asset, am I supposed to remove both the things? Yeah, you have to remove both the things. Remember, na? Right. So that means if sold, remove both, or you have to make the ledger balance is equal to 0 for both. Done. Sir, I sold, sir. Sold for how much? No, I'll say. Sold for how much? Sold for 60 rupees, sir. Super. Now what should I do, sir? What is there? Very simple. You sold means first fixed asset account shows which balance, my dear? Debit balance. Correct, na? If you want to remove means what should I do? Credit, sir. Correct, na? Two fixed asset. Yes, how much number? 100. Done. This is gone. Next, accumulated depreciation shows credit balance. You want to remove it. Then what should I do? Ulta, debit. So what do you record now? Accumulated depreciation account debit. How much? 30. 30 is there, na? 30. This is a balancing figure. So after writing this, gone. Now, tell me simply. So sold for how much? That means cash came? Yes. So cash came. So it is a inflow. So 60 rupees. My asset has gone up. That's super. Now, have you got a profit or loss? Obviously, what is the balancing figure? This is 100. That is 60 plus 30 is equal to 90. That is obviously, this is a loss. This is a loss. This is a balancing figure. That's all. This is a loss on sale of fixed asset. That simple it is. First thing you should remember, I am selling the fixed asset. So fixed asset should not be there. Accumulated depreciation also should not be there. Should not be there means what do you do? Fixed asset is showing debit balance, credit it. Accumulated depreciation showing credit balance, you debit it. Exactly, ulta you do it. Job is done. Correct? Right. I hope you must have copied already. But anyhow, I am presenting it here. See this? Same thing. Now, I am selling it for 70. Pass journal entry. Which is easy now. Obviously, it is easy for you right now. Done? Hope you have cleared. Right. Excellent. So first what should I do? Remove both. Accumulated depreciation account debit. Fixed asset account credit. Over. Next. Cash has come. Came. How much? 70. Is there any balance difference between debits and credits? No. Matching exactly. Obviously there is no profit. There is no loss. That's it. Okay. Can you try the other one situation? That's it. 120 rupees. Sold for 120. Try now. Done? Yes. So again, concept is same. Fixed asset credit, accumulated depreciation account debit, cash has come, remaining is my profit or loss. Correct na? So cash account, depreciation, correct na? That's all. This is 50 rupees is your profit. Correct na? That's why you have credited and that is gone to profit and loss statement. Is that clear, my dear? That's all. That's it, my dear. This is about fixed assets accumulated depreciation ka simple concept. Very, 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 very easy. Anybody can understand. Super. Perfect. Now, preference shares ka related. It's okay. I have presented everything in one shot. Nothing worry. I'll explain you. Right. This you must have studied in your where foundation may also, maybe in degree, maybe you must have forgotten. Forgotten. Nothing to worry. Let's revise. Everything is, our objective is to revise it. We know something. It's not that we don't know anything, but we just want to recall the subject. Revise it number of times. Then it'll go absorb. Mind will absorb like anything. Any day you ask, it will come back. Okay, then chalo. So preference share capital when you have issued it. What is their cash account debit? Preference share capital. Sir, 10 rupees preference share capital, sir. I have issued for 12 rupees. Okay, that means secure the 2 rupees excess whatever issued is 2 rupees security premium. That is 12 rupees. Agree? That's it. Sir, now redemption. You have redeemed it at par. At par in the sense what? At face value basically. Correct na? Face value mein redemption. Face value, what is the face value? 10 rupees. You paid them how much? 10 only I paid. Not a problem. Anyhow, you got 10 rupees already. Same thing, you gave 10 rupees. No gain, no loss, nothing. Correct? Perfectly alright. Now I redeemed at premium. I paid excess money, sir. Super, not a problem. Now also. Correct na? So preference share capital account debit. How much you paid? Sir, I paid 15 rupees. Okay. Sorry, not this. I paid cash 15 rupees pay kiya. Okay, let me write it here. 15 rupees I paid. But preference share capital, you have accounted preference share capital at what? 10 rupees. 10 only can be removed. Na? Preference, no, once I redeem it, there is no preference shares. Correct? Na? So redeem that. Preference share capital should be debited with 10. Now, but how much you paid excess? Excess I paid. How much you paid? That is actually 15 you paid out of 10 rupees. That means, correct? Now, 5 rupees excess is there. 5 rupees excess, what do you do? Yes, first and foremost thing. When you have issued at premium, where have you transferred? Security premium account ko I have transferred. When issued at premium, security premium. When you redeem at premium, that time you credited, issue time credited, now redemption time debited. Okay. Sir, security premium debit, sir. But sir, a security premium only 2 rupees is there. Okay. Only to the extent of 2 rupees you are supposed to debit now. Only to the extent of 2 rupees you are supposed to debit because that much only there. Okay. Correct na? Sir, still there is a balance. Still I need to put this balance, no, but this is a balancing figure. That should be transferred to P&L. Because what can I do? Correct na? Either is a loss to me. Because I collected only 12 rupees. I am paying 15 rupees. Isn't it a loss to me, my dear? Yes, obviously it is a loss to me. That is supposed to be charged to profit and loss statement. Is that clear? Done. Next point. Fixed asset related entries mean this is a revaluation related and etc. It should have been on the top. It's okay. Just doesn't matter. Fixed asset related entry. You have revalued the fixed asset. Revaluation. When I say revaluation, correct na? You are writing, I hope. Whatever I write on the screen, you please write it. Sir, it is not coming in the slide. So what? I am writing, no. Why you also write? Na? That's all. Okay, revaluation means what? Revaluation may be increase. Revaluation can lead to increase or revaluation lead to decrease. Both. It can happen both the ways. Got it? Increase also fine, decrease also is fine. Now, what we are talking is now increase. Increase in the value. Okay. Increase. When this is once again discussed under accounting standard 10 I am going to discuss the same thing deeper and deeper. Right now, temporarily, I am giving you this. Okay, na? Right. Fixed assets revalue. Increase in the value, sir. Nice, excellent. So what should I do? Whenever increase in the value, if you do it, na, fixed assets account debit to revaluation reserve account. It should be routed to revaluation reserve. Okay, to revaluation reserve, sir. Superb. Now, sir, if it is a decrease, sir, decrease of the fixed asset is a loss to me. Okay, it should be charged, decrease should go to P&L. But before going to P&L, first you should look at the balance sheet. Do you have revaluation reserve in the balance sheet? करके देखना एक बार. है sir, है तो first revaluation reserve को debit करो to the extent available. Over and above the decrease is there, then you debit the profit and loss statement. Now like this, first RR. RR means revaluation reserve only, nothing else. Yes, RR debit karo. Say example, first time I have increased 100 rupees, 100 rupees. Okay, but sir, later it is reduced by 125 rupees. Okay, 125 rupees I am crediting fixed asset. But I can make the revaluation reserve to 0. Revaluation reserve shows which balance? Debit balance. Revaluation reserve, nothing but equity. Correct? Na? It's part and parcel. Reserves and surplus. Reserves and surplus is equity. In the next class, maybe after maybe I'll finish this in a half an hour or 1 hour. Okay. In the next video, you will be able to get that. Okay. Done. So revaluation reserve, how much is there? 100 is there. So to that extent, I am debiting. So by debiting this, you're obviously clearing it. Correct? Na? Done. P&L account. How much P&L account? P&L account is nothing but balancing figure. Balancing figure 25 rupees is P&L account ko charge off. Clear guys? Perfect. Next, fixed asset written off. One more thing. See, there is accumulated depreciation exists. Written off means what? Sir, I have a computer in the balance sheet. What is there in the balance sheet, my dear friend? Computer is there. So now being an auditor, I will ask you. Computer you are telling is there, but show me, physically also show me in a computer ko. Oh, sorry, it's not there. It's missing. Oh, it's missing. Then missing means it's okay. Missing that whatever you are trying to do, find out such it and all. No, I'm not getting, sir. Oh, super. Then remove from the books. Physically asset is not there. Then why is it there in the books? If it is there in the books, you will prepare in the financial statements. Computer, super computer, you will write. Correct now. Where is the computer means nothing, nowhere, sir. When it is not there physically, it should not be there also in the books of account. So you have to remove it. That removal is called writing off. Remove it. Correct. Writing off. What do you mean by writing off? Remove from the books of account. Remove from books of account. Remove from books of account. That is called writing off. Write off. Writing off. Write off. All these are same sentences. Okay, na? Don't be worried about it. Hope you got it. Done. Excellent. Now, next point. Chalo. How do you write off? Very simple. Yeah, I'll tell you here. Yes. Sir, example, there is a computer I told. Yeah, computer. What is your cost? Sir, I bought the computer for 40,000 rupees. Okay. So far, accumulated depreciation, how much? Accumulated depreciation, 25,000 rupees is there. So, book value is equal to 15,000. Now, this computer is missing. As I told you, let it miss. I don't have a problem. Correct, na? But what should I do, sir? What should I do? You have to write off, na? Write off means is it a sale? Write off. Write off means gone. That's all. It's missing. Correct, na? Is not equal to sale. Correct. So what should I do? Do you get cash? Where do I get? Whom did I sell? So cash account debit 0. Nothing will come. But asset is not there means asset should be removed from the books of account. Exactly. Asset should be removed from the books of account means I told you accumulated depreciation account debit 25,000 rupees. Correct now. To fixed asset or computer, whatever you say, computer account that is equal to 40,000. Correct? Sir, balance. Asset gone means 15,000 is missing also. 15,000 is missing means isn't it a loss? Exactly. So that is the loss. What is the loss? That is equal to 15,000 rupees. Got it? Exactly. This is the way. Writing off. Asset is not there. Asset is not there means asset means 15,000 is there in the books of account. 15,000 you should clear it. Make it 0. Made it 0. And 15,000 gone, no, that means a loss. Na? Loss should be debited to profit and loss statement. That's all. This is how you are supposed to do it. Correct? Right. Chalo. So fixed asset 100, you wrote off. Same, I mean with the number difference, I have given the journal entry here. Done? Clear. So now next thing. Profit transferred to general reserve or any other reserves. Transferred. Sir, profit is transferred to general reserve. From where it will happen? It will happen under what is that? Appropriation of profit. Correct. Now, profit and loss appropriation account say will happen. Retained earnings say it will happen. Both are one and the same. I don't want to confuse you more and more. Okay. Retained earnings account debit to general reserve. You must have whatever you have accumulated. Na, that accumulated number should be going out to reserve. Reserve it is we are transferring. Correct. Na? See what is transferring, sir? I'll tell you like this. Simple. Sir, this is the balance sheet. Super. Here reserves and surplus will come. Yes. First thing, retained earnings. Retained earnings in the sense I told you, this is nothing but profits of law or accumulated profits. What is this, my dear? This is accumulated. This is accumulated profits. Okay, how much is there, sir? Oh, say 10,000 rupees is there. Okay, general reserve GR. So how much is there? 2,000. Now company took a decision. No, let's do 1,000 rupees transfer. 1,000 rupees transfer means what do? Will 1,000 rupees reduce it here and 1,000 rupees you add it here. Correct. These are all part and parcel of equity. What is it? Part and parcel of equity. Equity shows which balance, sir? Equity shows a credit balance. Equity shows which balance? Credit balance. Correct, na? So E account shows which balance? Credit balance. E account also shows, both shows credit balance only. There is nothing like debit balance. All shows credit balance. Now tell me, you are reducing from the retained earnings, na? Are you reducing from the retained earnings? Yes. Reduce means debit it because it shows a credit balance. So debit it and reduce it. That's why we are recording retained earnings account debit. Correct, na? To general reserve. Yeah, GR shows what balance? Credit balance. Both shows credit balance, I told you. Say credit balance. Correct, na? Yes. So general reserve, you are adding it. So retained earnings account debit to general reserve. 1,000 rupees if you write it. That's all. That is a transfer of. If you say no, transfer it to capital reserve. Transfer no. GR place maker, you write how many, whichever the reserve name you want. CRR, capital redemption reserve, I want to transfer. Transfer it. To DRR, debenture redemption reserve, you want to transfer. Sir, I want to transfer it to capital reserve. Transfer it. I want to transfer it to dividend equalization fund account. Transfer. From retained earnings only, all the transfers will take place. Unless until he says some other word. Otherwise, it happens always through this. Okay, if he gives a new name, write that new name only. Na? Clear? Right. So, shall I go to the slides? Yes. Now, so retained earnings to general reserve. Any other reserve, whichever the name they give, that name only you write it. Got it? Next thing. Sir, goodwill, miscellaneous, ME stands for miscellaneous expenditure. What is this, sir? Preliminary expenses. ME stands for miscellaneous. Miscellaneous expense. Okay, right. Miscellaneous expense. PE means preliminary expense. Actually, preliminary expenditure should not be there in the balance sheet. It shouldn't be there in the balance sheet. Suppose it is there. You want to write off. Write off. Write off means what? Remove from the books of account. Yes. Or any other asset. Asset means which balance it shows? It shows a debit balance. Correct. It shows a debit balance. Then you want to write off. Remove from the books of account. Asset is gone. Means a loss to you. That's why what should I do? Yes, obviously P&L account debit. Goodwill gone means goodwill should be created. Miscellaneous expenditure should be created. Preliminary expenditure should be credited. Any other asset name, whatever you say. Correct na? To some other asset also. Whatever the asset you want to write off, you can write it off like this. Hope you understood. Done. Okay. See, this provision for tax related entries. Okay. Yeah, these are very important. Okay, again, I will explain it to you one time, two time, whatever it is. But you need to have a good revision of this subject. Otherwise, I told you, I mean, if you read it number of times, when you move forward into the subject, that time the benefits and usage will be understood clearly. Okay, chalo, let's start. Say the first point, provision for tax related. Here also two situations will come. Okay, what are the two situations? Let me write it here. Yeah, provision tax related, I will say tax related. Tax related journal entries. Okay. There are two situations that are going to be dealt, like how you have a fixed asset account, accumulated depreciation account. Okay. Same manner. Here also two situations. Two ledger accounts can be there. What is it, sir? First one, you have only one account in the balance sheet. That is PFT, provision for tax. PFT stands for provision for tax. I will write now onwards provision for tax. PFT only. Okay, right. And in the balance sheet, there are two accounts exist in the balance sheet. What are the two accounts? One is PFT, provision for tax. Second one is advance tax. Advance tax. So how do you record the journal entries under situation number 1 and situation number 2? Okay, can you copy this first? Yeah, how to deal with advance tax also I will explain. How to deal with the provision for tax also I will explain. I'll explain everything. Okay, just you need to focus. Done? Chalo. So now the question thing. Let's come here. Here what did I say? We have got only one account exists in the balance sheet, which is provision for tax. Under that circumstance, correct, now what do you do? Now provision for tax, provision is made. Provision means what? You have to make a payment. Na? When you earn profits, are you supposed to pay taxes or not? Yes, you have to pay taxes. How to calculate it? The tax teacher will explain. Correct. Na? I will say how to account that, sir. After computation of your tax, one number will come. That number, how do I account it? That much only I will be explaining it to you. Correct. Na? Basically, yes. So provision. Correct. Na? Say example, my dear. You have got 1000 rupees of profit. What you have got? 1000 rupees of profit. Done, sir. Yeah, I'll write it in this sheet. Sir, I have got a profit before tax. Before tax. How much, sir? 1000 rupees. Where did you compute this provision for tax? This obviously in the statement of profit and loss statement where we have computed. Correct, na? Yes. We have computed. So taxation, where do you do tax expense? Are you supposed to pay tax? Yes. Correct, na? You have to pay tax. So this is an expenditure. Under expenditure, I mean under below we will write tax expense. Some number, say 300 rupees, 30%. This is provision. This is profit after tax, PAT. Profit after tax, like that we will write it. Point what I am trying to tell. This tax is an expense charged to profit and loss statement. Correct, na? Tax is an expense. Correct, na? And this is charged to P&L. So what is the journal entry you will record? Tax expense immediately will you pay? You will pay a little later or something like that. There is advanced tax concept. So many concepts are there. I will try to explain it to you one by one. So when you make a provision, correct, now when you make a provision, what is that you will record, sir? Tax expense account debit. That is current tax we call. Current tax means for the current year. Simple. As per the Income Tax Act. Yeah. Again, this concept I am going to explain it to you when I deal with Accounting Standard 22. Every standard mein journal entries will be there. Correct. Now, obviously, that is how you have to build your basic concept. I am trying to give you which are all required when you start a chapter. Correct. Na? If you don't know this and if you directly get into the standards, you directly get into some standards, no? Then you will face some problem, obviously, because you don't have the fundamentals. If you don't have fundamentals, or you know something, half you know, or 75% you know, 90% you know, but not full, then you will obviously feel the gap. That gap should not be there. That is what I am trying to explain it to you. Okay, guys? Done. So, provision, current tax expense account debit. It's a provision. It's payable. Correct? Na? What do you say? Provision for tax. Provision for tax. What is provision for tax? It is a liability. It is a liability in the balance sheet. Are you supposed to pay to government? Yes. When you make a payment, that day provision for tax account debit to cash. Next. Sir, income tax paid. Yes, provision for tax account debit to cash or bank. Done. Right. Sir, we got refund. Sometime what happened? Sir, I paid. How much you paid? 100 rupees I paid. Yeah. But we will say, sir, we paid 100, but we are not liable to pay 195 only you are supposed to pay. Correct. But you paid excess, na? Correct. So what will happen? That 5 rupees will come back. Welcome. So refund is there. Refund is there. So what do you do? First paisa aa gaya. Okay. Sir, cash or bank account debit 5 rupees. What should I say? To provision for tax. Reduce it. Correct na? Reduce it. The 5 rupees. Correct na? You are supposed to. Yeah. When you make a payment, this is the entry. Correct na? When you get the money back, that is a reverse entry. Basically, simple. Not a too much difficulty thing. Got it? Done. I hope you understood. Yes. Done. Next, suppose when you have got two ledger accounts are in the balance sheet. One is for provision for tax and the next one is advance tax. What did I say? One is provision for tax, next one is advance tax. Huh. So how do I do it, sir? Two ledger accounts are there. Great. Again, as usual. See, provision for tax is a liability. You make a note. Okay. What about advance tax? You first only you paid the government. Advance tax, it is an asset. Your tax master will explain or must have already explained. I'll tell you. See, this is my financial year. Which is my financial year? Something like say some simply number. Okay, something like 25, 26, 26, 27. Something I'll tell. Okay. What you need to know practically. Practically what you need to know. Right. When do you make a payment of tax? After year end? So what is year end here? Year end is equal to sir 31st March 2026 sir. So you will pay it in April. No, no way. It is not in April. So then what should I do? What is the first quarter? First quarter in the sense April to June. Yeah, you are supposed to make a payment of advance tax 15th, June by 15th due date. Yeah, by June 15th. Sir, how do I know what will be my profit for the year? You have to estimate. Okay. And some percentage they have given like 15%, 25%, 40, 50%, something percentages are given by the government of India. You have to calculate. So if I expect like 1 lakh profit will come. My tax, I am expecting a tax of 1 lakh. Tax only 1 lakh. Into 15% you have to deposit to the government. Oh, advance only I should pay. Yes, you should pay advance. Not after the year completion. During the year only you should pay. Why sir? Why sir means government has expenditure or not. Government has to pay salaries to employees. Government has to build so many things. Correct na? So if you say I will pay everything only after 1 year, this means this 1 year how do they make a payment to their employees? Correct. So that's why they do expect the money. And when do they expect money? During the year only you are supposed to make a payment. Okay, like that. So April to June you should pay. Sir. Okay, then July to July to what? July to September. Yes, September 15th only you are supposed to make a payment. Like each quarter, 15 days before completion of the quarter only you are supposed to make a payment. That is advance tax. But provision for tax, when do you make it, sir? Provision for tax is made at the year end. At year end. On 31st March or later after 31st March, we will make a provision for tax. But advance tax, when do you make a payment? We pay during the year, not at the year end, during the year. This is practically. Got it? So first you will make a payment. Now, correct. Now, have you made a note of this basic things? Everything you write, my suggestion is because you may be learning, you may be listening such kind of things maybe for the first time. Some of you, correct? Na? Nothing wrong. You're listening, na? So now if you know advance tax will be paid first. Then if you after completion of CA inter, when you go for articleship, na, you will not ask such silly question. Advance tax, oh, it will be computed. June 15th is June 15th, September 15th, December 15th, March 15th, March 31st. These are all the due dates. Got my point? No? Yeah, like that if you know it, na, then you will have some value in the office. Correct. Otherwise, I don't know anything. I just cleared exam. That means you are bookish. Well, less value, obviously. Less value to the firm, less value to you also. Correct? Yes, my dear. So, chalo, let's go ahead. Sir. So, what will happen? When you make a provision, when do you make a provision? Same entry. This is when do you make it? At year end. YE year end. Yes, sir. But when you have paid advance, income tax paid, this advance tax, correct? Na? This is paid when? This is paid during the year. Quarterly, on quarterly basis. When you make a payment, what do you say? Advance tax account debit. We don't say provision for tax account, no. Like accumulated depreciation, we'll keep the two ledgers. When you make a payment, advance tax account debit to cash, I will make a thing. Okay. Sir, refund aa gaya, sir. Refund aa gaya, so what do you do? Same thing. When you make a payment, what entry you wrote it? When you get the refund, that is a reversal entry of the above. Understood? Right. Now, sir, in this situation, say example. Sir, current tax expenditure is equal to, say example, actually 1000 rupees. When are you analyzing this? We are analyzing at the year end. Actually, how much you paid? I paid during the current year. So how much you paid? Actually, I thought it will be 1100 करके 1100 pay किया. Already paid. Because it's quarterly basis. Na? Exactly calculation cannot happen. That's why first you make a payment. When you make a payment, thoda little plus or minus will happen. If you have paid less, you have to make a payment in March. If you have paid more, then you should request the government, boss, I paid more, so please get me back my money. Yes, they will give you. Nothing to worry. So excess, isn't it excess paid or not? Yes, excess paid. How much excess paid? 100 rupees excess paid. Correct. Na? So 100 rupees excess paid, 100 rupees will come back. Correct. Advance tax have you credited or not? Yes, advance tax credited. So advance tax initially, what is the balance of advance tax now? Initially 1100, sir. Again 100 rupees reduced, sir. That is why 1000 rupees is the balance. Correct na? Observe this, my dear friend. Correct na? So if I say balance sheet, yes. So here there is a provision for tax that is equal to 1000 rupees. Here there is an advance tax. Two ledger accounts mein advance tax has come 1000 because 1100 minus 100 na. That's why 1000 has come. Clear no? Done. Now what will happen here, sir? Now, correct. Now what will happen here? Nothing will happen. Actually, how long you will continue? This is for, let's say this is for 2025-26. Okay, next year, sir, this is 2026-2027. Next year, sir, 2027-28. Correct, na? So it will be like this, two accounts only will be maintained lifetime. No. Right. Practically what happens? After year end, we'll file income tax return. Correct, na? Our income tax return will be approved by the assessing authority, officer. Assessing officer, AO we call. Once he says, yes, your calculations, everything is perfect. I'm giving you 100 rupees back. Then once assessment is completed, that day what you should do, you should knock off because my job is done. I already gave the money. I was liable to pay 1000. I paid 1000. So both I can remove it. When can I remove it? Only when the assessment is completed. What is assessment is completed? As I told you, assessing officer should say everything is clear, all are fine. ऐसा बोलना. That minute you remove it from the books of account. Yeah, it is an asset, so it shows debit balance. It is a liability, it shows credit balance. Both remove is ulta. Correct na? Advance account will be credited, provision for tax will be debited. Clear? That's all. That is what. So tax settled by the income tax department. That means assessment is completed. Though what is the journal entry you record? Provision for tax account debit, advance tax account credit. Correct na? Same 1000 rupees, 1000 rupees. Both the accounts. Correct now. What will happen, sir? Both the accounts balance is equal to nil. Correct na? Clear. Like that it will happen with respect to income tax. I hope you got some idea, understanding. This idea will be developed over the period. Okay. But first the basic idea if you have no, if you strengthen yourself on all these cases, na, then taking you through this entire syllabus will become very easy for me. Okay, you should trust me and you should listen to my instructions. Okay, and I told you already, trust me, I have got a lot of experience in this field. My experience is not just bookish, my experience is practical. Try to get the advantage of it. Okay, right. So lesser jokes will be there, more content will be there. Got it? But subject you want to know. Do you want value or you want to become chartered accountant or you want to become a joker? Correct, na? Right. If you want to become joker, then I am not the right teacher to you. Sir, I want to become a chartered accountant. I wanted to get good value in subject. Come to me. I am the right person. Because I know the bookish. I do write books. At the same time, I do practicality. Lot of practicality. Okay. Our discussions will be very high level. Right? So trust me and just follow me. That's all. Done. Chalo. Let's go to the next level. That's all I told you. It's a debenture related. These are all small things. It'll get over maybe in another few minutes. I'll close it. Sir, I issued debentures at par. Very simple. You studied cash account debit to 10% debentures. That's all. Sir, debenture face value is equal to 10 rupees. I issued at a discount of 10 rupees. Array. Discount of not 10, this may be 100 rupees, that is discount of 10 rupees. Yeah, this is 100 rupees. Write it 100. Typing error by our team. Fine, doesn't matter. So cash account, how much you got? 90. That means you issued for 90. 90 aa gaya. Right. Sir, what about the 10 rupees? 10 rupees is a, what should I do? Actually, in another standard of accounting, standard 16, I will tell this is a borrowing cost, I will tell. Why, sir? Debenture is a loan, borrowing only, right? So, aren't you losing 10 rupees? Yes. That's nothing but borrowing cost. I'll explain this little later, I told. I'll explain it. So, cash account debit 90. Correct. Now, discount on issue of debenture account debit 10. Yes, DOID we call. Correct. Now, you must have studied this. DOID. Two debentures, 100 rupees. Done. Now, some other important notes related to cash flow statement. Okay. Yeah, these are all not relevant exactly. Okay. That's it, my dear. This is about, what is this about, my dear? Basic journal entries. Okay. This much I told you, repeat, revision again. Sir, I know everything. Still, please, 5 minutes. First day, it will take half an hour to read it. Second day, it will take 20 minutes to read it. Third day, 10 minutes may will complete. Fourth day, fifth day, and all 5 minutes may fat, will happen. Okay. Continuously 10 days, if you do revision of these journal entries, no, you will never get a doubt on you. Okay. Trust me that. Fine. Right. Next. Students do ask generally. Sir, in Amazon, there are so many books are there. Advanced Accounting Made Easy, 20th edition, 21st edition, whatever it is. Latest edition, what is available, just look at my website. Whatever appearing in my website, that is the latest edition. Okay, what I sell is obviously only the latest edition. That's the best part for you. Okay, just go through my website and you can order there or anywhere you can order. It just doesn't matter. But my sincere request, never ever Xerox it. Okay, I'll tell you. I have taken almost 1000+ hours for writing that book. After working hard and writing a book, if someone just steals my effort, do you think that's a good to the student? Correct, man. If you are a thief, the impact will be like that, my dear. I know you are all good guys. Right? If somebody says, no, I want to Xerox it, tell them, sir has not just copy pasted from somewhere. Once you start reading my book, you will get to know. Please never ever encourage. Never ever do this silly mistake. Correct? No, don't try to snatch the knowledge of some other party, efforts of somebody. Correct? Now, if some student has put in a lot of effort, suppose he did not clear, how much pain will be there? Correct? Now, I have put in so much of effort. Somebody steals my effort. Same pain, no? Correct? Now? So I hope you, my dear friend, understand me. Okay? Accordingly, take a wise decision. Wish you the best. We'll start with the basics of accounting standards in the next session. Done?